right. Good morning. So, what I wanted to do in this video, and this might confuse people a little bit, but I think it's better to get this in early before we get too much into indicators. We have to be able to look at the chart just with no indicators, or very little indicators, and know what's going on. So, this is oil again, /CL, and you can basically see grossly, very grossly, that we're in an uptrend. This indicator down here is called a breakout indicator. I have to get that to you. But basically it's saying, at the end of each day, this is a daily chart. At the end of each day, we've been basically closing higher highs. And there are some periods where there's sideways activity, and in those periods you don't get a high, right? So how this is useful is that it's a momentum indicator, meaning it's telling us what direction the market is moving in. All right, now this is obviously an uptrend, right? Let's just draw a gross line here. Okay, this is an uptrend from this point. Oh, that wasn't the one I wanted, but we'll work with that. Um, yeah, we can do that. So this is an uptrend, that's been moving up like so. All right. Now, think of this as your 50,000 foot up view. Okay, this is your 50,000 foot up view. You're in an airplane 50,000 feet up, and you're looking at, um, you know, a battle going on between two teams of buyers and teams of sellers. And at this level, you really can't see the the battle happening. You just know that overall, the buyers are winning the battle. That's why we're getting this higher highs over time happening. That's why we're getting um, bullish momentum, right? All right, now that's the daily 50,000 feet up view. Now, what I want to take you to is a little finer tune. We're going to go to the 8 hour. All right. And on the 8 hour, I'm going to show you some areas where this fight that's happening is not just, a straight shoot, right? It's not just bulls winning all the time, every single day. The bulls win, and some days the bears win. But overall, the bulls have been winning. So an example of that is, right, see that small inflection point there, right here? Or better yet, let's look at this area right here. Okay, that is a good area to look at. And just to clarify things, I want to take that off and just show you that. All right, so yeah, we can do this one right here. You see, there's a little sell-off there, right there. We're gonna just take that trend line tool and do that, right? And if you kind of blow that up a little bit, you can see there was some fuzziness here, but there was a sell-off, break, pull back, and then a continuation. You see how they came back to that same level again. Let's do another one right here. Okay, so right here, you see how the price came right up to that point, then sold off, right? Broke it, and then came back and revisited that, and then continued. That's an example right there. That's a good example. So let's blow that up. And what I'm going to do is draw a box around right where those sellers just started coming into the picture. So it was like, right, you see that red candle there? So we're going to just blow that up, just box it right there. That's where the selling began, at the top of that wick. That's where the selling began. So you want to blow that up, outline that, and pull that box over like that. Okay? Why is that significant? Why is that significant? Because at this point, at this price, 55.53 to 56.11, that's where there were more sellers. Sellers had a lot of power right there. Probably a lot of orders, sell orders were sitting there. And so when the price runs up on that, things get out of equilibrium, and the sellers become more powerful than the buyers. So they press the price down, and then on the second push, bam, see how they blew through that level? So this was acting as resistance. And then here, okay, probably they absorbed all the sell orders. The bulls did. And when price comes back to that level, there's more buy orders than sell orders. And it took off again, more buy orders. They took up more buy orders here again, and it took off. So we call this a supply zone. Supply zone, right? Well, that's where the sellers are. Just think supply, seller. Supply, seller. So this was a supply zone here. Okay. And when supply zones, sometimes they can work for 3 or 4 or 5, 6 taps, and then on the final tap, the bulls will break out and move back in, and now there are more bulls here in that territory than bears. All right, so once this is broken, it now becomes a demand zone. Demand zone. D for demand. Okay, so they pushed up, pulled back again, and this zone was respected. All right, so let's just outline here. You see, when they got up to this price, somewhere around there. Okay, you had a bounce. That was a supply zone, but you had demand, supply, hit demand, supply, hit demand. Then bulls broke through. Very, very important. So again, supply, supply, hit supply, back to demand, and then this final push broke this supply zone. Then this became demand. All right. So that's the battle that's happening on a more fine-tuned time frame. Demand. Very important. You could literally trade without indicators, and this is how the higher level people do. But indicators are good too. But this gives you a little more accuracy in terms of knowing exactly where um, entries are possible. So, like here, they broke supply or broke support, and then broke resistance. Supply is resistance here. Broke that resistance band or supply zone, and then that became demand or support. So resistance becomes support, and support becomes um, resistance in a downtrend. But in an uptrend, you're going to find that supply zones are broken, and those supply zones become demand zones. And here's another example of that. Okay, see how it hit resistance here, back to demand, resistance, back to demand, blew through resistance, and it actually didn't even come back and respect this level again. It might eventually come back down and hit that and continue. Let's look at what's going on lately over the last few days. So price broke that level, came up here, hit a resistance, right, sold off a little bit, and you broke through it on this bar. You broke through resistance, and they came back and respected that as now a support level. And there's some overlap, like you can kind of think of it as like it's not just precise like that. It's kind of fuzzy, like see how it came in, and so that's why I was drawing these zones like that. All right, and as we go down further into the lower time frames, you can see like really clearly exactly where the price pivots around. So right now we're right up on this level here. We're right up on it. And let's just draw a little box right there. See, we're right up there. So how does this apply to things? So right now you wouldn't want to go long. You wouldn't just say go buy right now. You would wait for, because most likely this is going to come back in, most likely. We would be anticipating this coming back
it's 6:30
to here, right? And then because we're in an uptrend, you would want to you would be getting long in here. Like yesterday, I was long in this area. Like when I saw that candle, I got into this move here, from here to here. I'm still in this candle. So let's look at that on a lower time frame. So let's look at it on a 4-hour time frame. So see, on a 4-hour, things start getting even more fine-tuned. You can start to see exactly where the inflection point is. So here, see, we can kind of adjust our zone. To just get a little more fine-tuned. All right. And what you'll also see is that, like, see how this supply zone was respected 3 times. 1, 2, back to demand. 3, back to demand. 4. Okay. Most of the time, it takes about 2 times. So I'm anticipating breakout, pull back today. That's why I'm staying in this trade. My stop loss is down here. You can't see it here, but Um, so what I'm anticipating is this move. Just because we've been in this range so long, these sell orders are probably getting absorbed by now. So break the, this is what I'm thinking. You're going to break out here, pull back, test, and continue. That's what I'm thinking. All right, let's look at things on a 1 hour basis. Okay, here we are. All right, so one other thing you look at these pivot points is how strong they are, like how fast the sell-off is. Like you see, like right where it hit here. Okay, right where it hit here. What is that? 64.74 2. Okay, it fell off pretty fast, and then when it came back up to that same point, it fell off really fast. Same point, fell off really fast. So short, you could have gotten in short going down, and if you had a range to work with. All right, so could you be going short right now? You could, but it's a little risky. Remember the overall. Let's back out. So the overall trend is the overall momentum. You see it on the daily is this higher, high, higher, high, higher, high. So the market is doing like, meeting resistance, but eventually the bulls take over that resistance, pull back, retest, pull back, extend, retrace. So it's like they're extending, retracing, extend, retrace, extend, break, then retrace, extend, retrace, extend, break that support, make an extension, then pull back. So that's always happening. But in an uptrend, most of the time, the supply zones eventually get broken. So you don't want to, like if we were going to zoom in to where we are now, you wouldn't go long right now. You would wait for this pullback, get in at the demand zone, then take it back up. Okay, and that's super important. And when you start using that with indicators, it gets even better. But you can, you looking at the chart this way is kind of where I'd like to see people start, and then compare it to the indicators. Like for example, all right, let's I can tell you right now that the CCI is going to be oversold. So let's add that on. Okay, see, CCI is overbought. So I already knew it was going to be overbought. I didn't have to put the indicator on to tell me that. I already knew that it was up on a major resistance level. Okay, and I know that the 12-hour trailing stop is around here somewhere. I just know that. It's probably under this level right here. Let's see. So we'll add that on. Average true range. There we go. Okay, so if you pulled out to the if you pulled out to the 12-hour, yeah, see it's right. It's actually below this support level. Okay, it's actually below that. that, right? So if this were to pull back, you'd be and you're going long, you'd be putting your stop down here and taking more risk than you really need to. Your risk should be like right here. My stop is right here. But the indicator confirms, what you're doing. You don't want to rely on the indicator, but it can more so as a confirmation tool. But in the beginning, it's kind of like they're kind of like a training wheel, you know. Um, so that's pretty much it. Remember, so in uptrends, the general force of the market is moving up. Bulls are in control. So you're breaking supply levels or resistance levels, breaking those, and those become demand. Then eventually you break, like this used to be supply, was respected several times here, and then eventually they broke it, pulled back to this demand level a couple times, and they broke this supply level. So right now, we're anticipating a breakout, pullback, and continuation. This is what I'm anticipating today. Going out to your daily level, you can't really appreciate that the battles that's happening, the back and forth ebb and flow that's happening on this scale. You have to zoom into your 8 hour, then your 4 hour, then your 2 hour, then your 1 hour. But overall, you can see on this scale you're making higher highs. So our anticipation is you're going to make another higher high. What does that mean? That means ideally you want to get in on the pullback to demand. See, you wouldn't go long here. You'd be waiting for this. All right. I think this is like the skeleton of the body, And then when you start putting the indicators on, it gets really super tuned. Like if you were yesterday, I'll show you where we were yesterday. Usually I'm looking on the 4 hour for the entry. Okay. So yesterday, market was oversold, right? Oversold, and I was waiting for my first breakout right there. Actually, it was this one. It picked up this one because I had a finer. I wasn't on 10. Usually I'm on 3 on this time scale. Okay, so it picked it up right there. And so I was in this move from in here. So this was at the 5 o'clock to 9 o'clock session. Then going into New York, the momentum continued upward. And we're still in this up move. Still in the up move, trying to get the breakout and continuation. Okay. So this is what you wait for. You wait for the pullback to support in an uptrend. This is the pullback to support and then you wait for, a breakout or continue some kind of sign like this is a good range to work with. And then you're going to use your technicals to get into that range for the continuation. You might be on your, let's look at that on using the local chart. That's kind of the one you're looking at. So, but let's look at that on the 5-minute. And I know this is super confusing, a lot going on here. All right, but this is yesterday, right? So this is demand zone. And then when I saw you broke above the 200 period moving average. I was in somewhere in here, right? And I'm still following along this thing with, with along, I'm probably somewhere below the 200, waiting for this to break out of this supply zone and continue. So, you have to be able to think macro and micro. What's going on the big time scale, and then be able to zero in on that small time scale, the 5 and the 1, and get in the entry. Like right now, if you were going to do anything, um, you would be thinking about going short. You would be going down, but there's not really, you know, you haven't broken the 200. You haven't had a pullback to the 200. You need a pullback to a resistance. If you're going down. So you really don't have a sign that support is breaking down. This is a support level, a dynamic support level. And you see you pull back here and continue. Pull back, continue. Pull back, continue. That's what we want. All right. Talk to you later.